From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. We're going to check in with the chairman and CEO of UPS in just a few moments, David Abney. But first, we want to check in on the markets, and we go to Abigail Doolittle with some decidedly mixed results, at least so far, Abigail.
Certainly there are mixed results on the day, David. Another interesting trading day, because when we came in earlier today, first thing this morning, the stock market futures, the S&P 500 E-mini futures down sharply, down more than 2%. So some of the folks out there who are confused as to why we have stocks up day after day, week after week, despite some of the dismal economic data that's coming out, could have felt some relief. But take a look at this, well off those lows. The S&P 500 just down 0.3%, even with crude oil absolutely plunging. That front month contract down 44%, the most ever, close to $10 a barrel. Who thought we would see that anytime soon, if ever again? But there it is. Even if this second month contract of the June is higher, it's still down, but that's not eating into stocks. And the reason why that tech-heavy NASDAQ up higher, David, up 0.4%, really being helped out by the FANG index. So at this point, the investors who have chosen to invest alongside the Fed's liquidity efforts and nuance or machinations, they are really benefiting with stocks down just a little bit. And some of the stocks that are really helping out here today, David, those stay-at-home stocks. Netflix, of course, reports tomorrow. That'll be an interesting look to see whether or not these stay-at-home companies are benefiting from all of this, because some are making the point people might be at home, but if they're already a Netflix subscriber, it might not actually boost their numbers.
Well, that's what I was going to ask you, Abigail. How much of this is an anticipation of some of the tech earnings coming out later in the week?
You know, I don't think it's so much in anticipation of the tech earnings. I think it's the continued momentum that we are seeing for some of those quote unquote stay at home stocks, that they're going to benefit through this crisis. And there's two different takes there. One could be that unfortunately the crisis and stay at home mode will last much longer than expected, and so those stocks are up. Another idea could be that the new normal is forever change, and I think that this is certainly the case, and that these are the companies to benefit in the future. Either way, investors going toward them. But again, it's going to be interesting to see whether or not how much the numbers have actually changed. Our investors have bid these stocks up to record highs in terms of the business that they're actually doing. And so tomorrow we'll get an early look at that with Netflix, David.
Okay, thank you so much to Abigail Doolittle for that report on the markets. Well, one of the essential services so many of us are relying on right now are those almost daily deliveries from our UPS driver. We're going to turn now to the man behind all those deliveries. He is David Abney. He's the chairman and CEO of UPS. David, thank you so much for being with us. Let me ask you the most basic question, which is, how has your business changed as a result of this COVID-19 crisis? What are you seeing more of? What are you seeing less of? How have the patterns changed?
Well, thank you, David, and glad to be on your program. And what I'll say industry-wide, so from a whole macroeconomic standpoint, is obviously a lot more health care, PPE, and critical shipments like that. And I think you're seeing that all across the industry. And with businesses being closed and with people sheltering in place, you see more e-commerce, more residential deliveries across the industry too. So that would be the two biggest things. And the good thing about our flexible global logistics network is it allows us to flex to meet the needs of governments or meet the needs of our customers. So it's interesting times, that's for sure, David.
Yeah, that's for sure for all of us, David. Let me pick up on what you just talked about, that flexible logistics, because you really have pushed hard on automation and bringing the computer, the digital age, into your delivery system. Is this experience going to expedite that? Is that going to drive it even farther and faster than you were doing already?
Well, one, it makes us very thankful that we have invested in the automation and invested in our transformation initiatives, which were all focused about speed and focused about agility. And of course, with the situations we're facing now, that just stresses the importance. But even when this crisis is over, we're just living in in a time of great change. So we think we will continue to build upon that. So it's just more important now than ever, and I don't see that diminishing once we get through this crisis.
On your business, give us a sense of what's going on with business to business as opposed to business to consumer. I'm assuming business to business is off somewhat. Business to consumer probably is up somewhat. Goodness knows that's our experience here up in Westchester. But does that affect your margins? Because I believe you have a higher margin, particularly in the small and medium-sized companies in the B2B as opposed to the B2C.
And David, that is because we have our earnings call coming up next week. I will be talking more in detail along those lines then. What I can tell you now, though, is from a macroeconomic or industry perspective, and that is that, with closures, there's less B2B, and with stay-at-home, there's more B2C. But I'll have more information to share about that when I get to the earnings call.
Yeah, fair enough. I don't want to get you in trouble with the SEC, David, whatever we do here. Final question on this particularly is, does your experience thus far, your experience with the UPS, does it tell you anything that would really be helpful to us about restarting the economy? What you've seen shut down, what you think might come back?
I do think we can add a lot to that story, and I'm proud to be a part of the Great American Economic Revival Group, one of them that the president is leading. And the thing that we have to offer is that since we have been declared a critical infrastructure business, we've been operating through the heroic efforts of our UPS drivers and loaders and pilots and mechanics throughout this crisis. And so we have learned a lot, and one of the things that I will be sharing with other businesses that have had to close down is what we have learned, what we see works, and what we would recommend they do and not do. So I do believe that we would add a lot of value to that discussion.
David, talk about those employees. What are you doing for them to try to keep them as safe as possible? What extraordinary lengths are you going to?
Okay, I certainly will. In fact, my favorite subject is talking about our employees, especially right now. They're just an amazing group of people that realize that we're a critical business, and they have stepped up to the plate like I haven't seen. In fact, David, we have record service levels now, and I can go back 46 years, so I can't speak for the company history, but I can speak for a good portion of it. And but the first thing is all about the safety. We have to, if we want to be a critical business, and if we believe we've got to move healthcare supplies and stuff around the world, then we have to take care of our people. And things like and these are just real important things. Emergency paid leave that was outside of our union contracts that we agreed to let our people know you don't need to come to work sick, that if you are feeling any problems, we can give you the paid leave. And enhanced cleaning of our buildings and our package cars and everything that people touch. Of course, following CDC guidelines and sanitizing supplies and masks. But one that was really important, you may have noticed it if we delivered to your house, is no longer are drivers having to require signatures. And so that means this diet board, this computer is not being passed from hand to hand. And we have learned how to make non-contact deliveries. And those are things that have made the job much, much safer and is allowing us to continue to function, but is due to the amazing efforts of our people.
We certainly have seen that at our house, I'll tell you that. David, you were going through a transition before all this crisis came up. That is to say, you have a new CEO coming in, I think June 1, and you're going to remain as executive chairman. Has this crisis and your response to it changed at all that transition? We've seen that at some other companies.
You know, it hasn't changed the timing. It's changed the process just a little bit. I mean, when we first started together, Carol and I, she was kind of shadowing. We were doing things together. Well, now we've been doing more virtual shadowing, right? And so that has changed a little bit. But we're still getting her out to meet our people. It's just through virtual means versus in person. But the great thing about this is she's been able to see firsthand how we're dealing with this crisis, and she will be off to a running start. And with the questions about what's the economy going to do in the remainder of the year and those kinds of situations, having someone like Carol Tomei's background and real emphasis on the financial side of it, and having lived through the Great Recession with her in her previous life, it just has convinced me more and more she's absolutely the right person at the right time. But the transition has been differently than what we planned, no doubt about it.
Yeah, everything is different from what we all planned. David, thank you so very much for spending time with us today. Always a joy to talk to you, but particularly during this crisis that you very much are in the center of. That's David Abney. He's the chairman and CEO of UPS. And now it is time for Bloomberg First Word News, and for that we go to Mark Crumpton.
David, the nation's top infectious disease expert is warning that moving too quickly to reopen the economy could backfire. Dr. Anthony Fauci tells ABC that unless the United States gets the virus outbreak under control, a real economic recovery isn't going to happen. Dr. Fauci is pushing back against protesters who are ignoring their governor's stay-at-home orders and calling for him to be fired over his guidelines. New Zealand instituted one of the strictest lockdowns in the world last month, and it seems to have worked. The country will begin to lift restrictions next week. New Zealand has about 1,400 confirmed and probable cases of COVID-19. Daily new case numbers have dwindled to single digits. The death toll at 12 is one of the lowest among developed nations. There hasn't been a day like this in the oil market since 1982. New York crude has lost more than a third of its value, and it's traded below $12 a barrel. Oil inventories have been soaring because of the collapse in demand caused by the coronavirus. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Coming up here, we're going to talk with Representative Haley Stevens of the state of Michigan, one of those hardest hit by the coronavirus. That's coming up next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. Well, they negotiated right through the weekend to try to get that next spending package in shape for the small businesses and perhaps for hospitals and testing. We go now to one of the people who will vote on that. She is Representative Haley Stevens from Michigan, a Democrat. So welcome. It's great to have you back with us, Congresswoman. Give us a sense of what you believe is in this package, and when will they be likely to vote on it?
Well, thanks for having me, David. And I'm optimistic that we can reach a deal this week. I have always looked at these packages, particularly the first big package that we did for relief on coronavirus as triage, right? We are in an unprecedented situation, and we are doing triage so that one, we can prioritize the health and safety of every American. That's priority number one. And two, so that our economy can see its way through the other side. And so the CARES Act, which was largely dubbed as relief, it was a $2.2 trillion package, money that went in to support hardworking American families, monies that were made available to small businesses, and monies made available to our cities. Well, we realized, all right, we've got to keep going here. A lot of overprescribed programs, particularly around the payment protection program. I've been around the clock with our small businesses in Michigan, our Main Street businesses, and we've got to make sure that they're able to successfully hibernate and see their way through to the other side of this situation.
Now, there's no question there's an awful lot of need out there at the moment. As you say, that $349 billion went away right quick. That reportedly is going to be replenished to a large degree. At the same time, there were reports that Democrats wanted to handle not just the hospitals and the testing, but also the state and local governments. It appears that that's going to be put off. Why is that?
Well, listen, we've known all along that testing is priority number one. our first coronavirus package at the top of March, the very beginning of March, started to prioritize funding for new treatments, funding for a vaccine, then funding for testing. And a lot of what you're seeing going on right now in terms of the debate is who's going to be responsible, who bears the administrative responsibilities. We know in Michigan, we're a top COVID hotspot, and we have people who want to get tests, who should be qualifying for tests, and are having a hard time accessing those testing capabilities. And so that's also something we're dealing with as we're also reconciling with the economic considerations here as well. I'm fully confident that we're going to continue going forward here in terms of how we break down these packages. If you're looking at the economy, right, and I'm a former Treasury official, and so I'll tell you, economic relief, economic triage, it makes sense to make it look exclusive for that subject. Right? If you're going to be doing economic triage, let's do that. If you're going to be doing a health care package, let's focus on that. If we can bring them together into one big package again, maybe we can do that. Or if folks want to break it up, that depends. On the small business front, David, we can't feign revenue where revenue doesn't exist, right? We know that. I mean, you talk to your sandwich shop owners and your beauty salons on down the line, and revenue isn't coming in. What we do want to have is those businesses succeed to the other side. And I'm on the phone with my mayors and my township supervisors every single week, and they're telling me, make sure our small businesses can survive, because that's important for our city's revenue, our township's revenue. And then in terms of the FEMA reimbursable costs for cities with the personal protection equipment or the testing abilities, that's also got to come on down. We're not here cherry picking, we're here doing triage on the economy and on the health matter, and they're inextricable from one another.
Yeah, and as you say, Michigan really is a hot spot. I follow it every day because I have a sister who's a nurse out in Ann Arbor, actually, and you're number 4, basically, on the number of cases as well as the deaths per capita out there. What kind of strain is that putting on the state budget and the local budgets?
Well, bless your sister's heart, and we are so grateful, and we salute all of our nurses and doctors and respiratory therapists and people who comprise our hospital systems, from the custodial staff to the food services staff. And there's so much great that's happening, so many great actions that are happening throughout our communities with people contributing food and the like. But look, I think to your question, there's a lot of uncertainty right now, and there's communities who are prioritizing health and safety in a way that they never dreamed. Our local hockey rinks are designated morgues. I just went and saw one of our field hospitals that's located in Novi, Michigan, and these are the suburbs, right? These are suburban districts we're obviously all paying attention to what's happening in Detroit. And the health effects are very real, just as the economic effects are very real as well. Again, that symbiotic nature of the two. So just as we're dubbed a COVID hotspot, and we pray for and support all the families who've lost a loved one, we want to make sure that we don't experience any more lives lost or prevent any more lives from being lost. And we know if we're going to bring our economy back, we've got to do it when we've stopped the spread, when we flatten the curve. And that's why these actions are being taken right now, and it's uncomfortable. I've talked to every type of business owner, from the landscaping companies to the Main Street company, small businesses, and they're being impacted. At the same time, we're seeing this uptick in fatalities due to this disease, and we've got to reconcile all that. We've got to push back on that first.
Okay, Congresswoman, thank you so very much for your time today. That's Congresswoman Haley Stevens, Democrat from Michigan. Coming up here on Balance of Power, we're going to talk about the stock of the hour. It is Halliburton that's pledging deep cost cuts to try to weather what has become the oil storm. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for our stock of the hour, which is Halliburton. It has been something of a roller coaster ride for the stock today. In the face of the oil price collapse, down at this point, WTI is down under $9 in single digits now. At the same time, Halliburton says they're going to cut costs. And for a full report, we turn now to Taylor Riggs. Taylor?
Thank you, David. And like you mentioned there, Halliburton sort of on a roller coaster ride today, as much as 4% higher, pairing some of those gains just up now about 2 to 3% or so. But the long-term trajectory of the stock, which as you can see year to date now down about 70% or so, still comes from the fact that, like you mentioned, oil now below $10 a barrel. Today they announced some specific measures that are moving the stock. So if you flip up the board, I want to dive down into some of those cost-cutting measures because that's what's moving the stock. They did say that they will cut CapEx by 33%. That's down to $800 million for the year. They're canceling all of their planned raises. They're eliminating an entire layer of management. Halliburton did say it's going to keep its dividend, but it will not increase its debt load. So all of these measures to really preserve cash. Flipping up the board again, this CapEx story here is really interesting. This is the first time the company has had a CapEx budget of less than $1 billion since the last time oil prices really saw a big move downwards, and that was back in 2016. This all comes as well as they were writing down the value of their assets now by $1.1 billion. Finally, what this means from the humanity perspective, David, is job losses are coming if they're not already being seen. As you can see in this chart here, they are going to be furloughing thousands of workers. A lot of this, of course, comes within the U.S. fracking division. This chart here is total U.S. This is not specific to Halliburton, but they are saying that U.S. fracking demand is expected to drop by about 60%. So here you have all-time fracking in the U.S. generally just back down to the lows of 2016. Back in 2016, those were all-time lows. So a financial and a humanitarian perspective here for you today, David.
Okay, Taylor, thank you so much. That's Taylor Riggs for a report on Halliburton. It takes a lot of courage to be investing in the energy sector right at the moment. Coming up later, we're going to talk with Senator Bob Menendez of New Jersey on the eve of that yet another historic spending bill coming out this week. He has yet another one after that to help state and local government. We're going to be Bob Menendez coming up. This is Balance of Power on Bloomberg Television and on radio. Every single day, we hear new reports about the spread of the coronavirus, with it apparently peaking some places, not so much others. Well, we have now a new report out from Morgan Stanley, and Michael Zezas, who's head of U.S. public policy there, is going to bring it to us about exactly what they're projecting for the next weeks and, for that matter, months. So, Michael, thank you so much for being with us. Really great to have you. It's a fascinating report, and particularly one of the things that struck me was your projection that it may be different in different regions. As we talk about coming back to work, that the coasts may be ahead of the center of the country.
Yeah, I think that's absolutely right. I mean, I think what we're looking at here is that states are going to largely govern the reopening process. It's going to be dynamic. It's going to be in stages. There's probably going to be feedback loops where data and the testing is going to dictate how quickly different areas can open. Some states are probably going to test boundaries more than others. And, of course, that means there could be some backsliding. But I think ultimately kind of the politics of sickness and testing and whether or not hospitals have capacity is going to determine who opens quickly and who doesn't. And if you kind of broaden it out to what it means for the economy, I think it means that we're still looking at more of a U-shaped type recovery, one that's going to take a little longer as opposed to a V-shape. And that's what's baked into the Morgan Stanley economic forecast right now.
So the president obviously has come up with his guidelines with these three phases, and you have to have a decline in certain numbers. What is the most important set of numbers? Is it number of cases? Is it number of hospitalizations? Is it number of deaths? All of the above?
I mean, it appears to be some of all of the above. But I think practically speaking, what is probably going to be most important to individual governors is what their individual hospital capacity looks like as opposed to the other factors. And basically, does the healthcare infrastructure exist such that you can feel comfortable taking the chance of opening up your economy a little bit more so you can actually treat people when they get ill if you kind of spike back up in the other direction. That is the practical public policy challenge that most governors are facing. Ultimately, it's what the data speaks to, but I think that's if you needed to narrow it down to one lens, it's probably going to be about hospital capacity.
And what projections do you make? How do you estimate the extent of testing? And by that, I think I mean both for people who have it, but also the so-called serology tests about people who have antibodies. What kind of projections do you make for how much we need and when we'll get it?
Yeah, so our biotech analyst, Matthew Harrison, led a lot of the work here. And in his perspective, given what companies are doing and the technology that's available, he thinks widespread serology testing should be available towards later in June. That doesn't mean that if you have widespread enough of regular testing ahead of that, you can open back up and you can have a fair amount of tracing that can give you confidence that you're not having spikes. But the serology testing is what gives you hopefully a broad enough base of data going into deeper into the summer, such that you could actually kind of de-escalate some of the social distancing in a more meaningful way. It doesn't mean you could completely go back to normal, but you can obviously get more people back into the workforce in a closer capacity environment, which is particularly important for New York, New Jersey, and California.
That's the testing. What about the treatment/vaccine? What sort of projections do you see for treatment and vaccine? Understanding, as I understand at least, the treatment will come long before vaccine in all likelihood.
Yeah, again, here we're deferring to the wisdom of my colleague Matthew Harrison, but the expectation is that the different types of antivirals under development could see widespread enough both production and acceptable use by the time you get deeper into the summer, such that is part of the overall story of whether or not there's enough hospital capacity. It's whether or not it's not just about whether or not there's enough ventilators, but are there enough treatments to actually sort of turn people through the hospitals quicker. So we think all of these things kind of come to bear as you get later into June or more into the summer. But again, the ultimate sort of what gets you back to normal has to be around immunization, and that's something that we're not expecting until 2021. And if you kind of broaden it back to the economy again here, I think that's why, from a fiscal policy perspective, we're seeing Congress increasingly engaged in wanting to continue to bring stimulus to bear, because there's a slow ramp-up period. As beneficial as some of these staged reentries to the economy could be relative to what we're experiencing right now, there's still plenty of backslide risk, and so you probably need more runway on some of the social safety net issues that the CARES Act and other fiscal actions have brought in.
What can we learn from China, if anything, from their experience? Because they clearly are ahead of us on this. I mean, they've got some manufacturing going again. They've even got some restaurants open, as I understand it.
Yeah, I think there's only a limited amount that we can learn at this point. I mean, some of the stuff is fairly obvious, which is to say that if you're bringing people back into small enclosed places, there are going to need to be more spaces between them, and therefore the economic ramp up is going to be relatively slow. But that being said, I think there's enough sort of confusion about the body of data that we have so far globally that I think it's hard to sort of conclude from China's experience that we would see a V or a U or an L-shaped recovery, particularly when we're talking about a different set of kind of cultural and governance norms. The U.S. is going to try and attack this in a federalist way, right? But the administration allowing states to dictate this means that we're going to have kind of different policies as opposed to a one-size-fits-all. Whereas I think there's questions about to what extent the U.S. can do contact tracing the way that China does. And so I kind of hesitate to suggest that we can learn a lot from China other than the obvious, which again is that as we are testing the waters of reopening the economy, it's probably going to be slow going in terms of putting large amounts of people into the same place. And of course, a lot of economic activity requires that.
Michael, finally, given what you've done at Morgan Stanley and the review you've made, the projections you've made, What information do you have for us about reopening the economy? That was the big subject for much of last week with the president and others addressing it. What wisdom would you have for us about what to do, how to do it?
I think at the end of the day, it's about we need a lot more data. So we need a lot more testing, traditional testing, a lot of serology testing would be particularly helpful. And because it's that data that is going to give confidence to decision makers and to individuals that they can do something closer to what was considered normal beforehand. Now, as I mentioned, there's a lot of cultural challenges with how you collect that data. Maybe not everyone's ready for the type of contact tracing that would be acceptable in other countries. But there's probably other ways to get that data just by having a massive scale testing regime. One way or another, you just need to reduce the amount of unknowns in terms of how pervasive the sickness is, so that people can then have confidence to then re-engage and employers can have confidence to bring people back to work. I think it really all kind of boils back down to getting more data.
All right, there you have it. Okay, thank you so much, Michael. Really helpful report. That's Michael Zezas. He is head of U.S. Public Policy at Morgan Stanley. Coming up here next, we're going to talk with Senator Bob Menendez of New Jersey about that spending plan this scheduled for this week, as well as what's going on in the state of New Jersey. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, reportedly, we're about to get another spending bill out of the Congress dealing with small businesses, replenishing that PPP program, as well as hospitals and testing, but apparently leaving for another day the need for state and local aid. Well, Senator Bob Menendez of New Jersey has a plan that he announced earlier today, along with his colleague, Republican Senator Cassidy from Louisiana, about what we should do about state and local aid, and that should be coming up next. And we welcome Senator Menendez now to Bloomberg. Thank you so much for joining us. So $500 billion, 3 tranches. Explain your plan, Senator Menendez.
Well, thank you, David. Our plan, which is bipartisan, it's called the State and Municipal Aid for Recovery and Transition, or the SMART Fund. It builds upon the existing $150 billion that was set aside in the CARES Act, but it expands eligibility to counties and towns with populations of 50,000 or greater. And it breaks it down in 3 different tranches. Roughly a third, $166.6 billion based on population size. A third, another $166.6 billion based on infection rates. And a third, $166.6 billion based on revenue losses. And we call it the SMART Fund because, frankly, it's common sense that we need to help the states and municipalities that are at the front line here be able to meet the challenges at a time of dwindling revenues but demanding services. So this is based upon the call of the bipartisan National Governors Association, Republican and Democratic governors alike. They put that figure out there, and we came up with a formula that we think is fair to all and also that addresses where the greatest needs are based on infection rates and revenue losses.
So you have a substantial issue with the coronavirus in your home state of New Jersey. I want to come back to that in just a moment. But how much consultation did you do with Governor Phil Murphy in New Jersey? Just get a sense of what they need in New Jersey? Because he said they really have a problem. And in fact, if they don't get money, they're going to have to cut back essential services.
Well, Governor Murphy is someone who I admire his incredible leadership under difficult times. We have constant conversations on a variety of issues as to how we get PPP resources to small business, how do we get personal protective gear to our frontline hospital workers, and how do we deal with essential state services at a time that New Jersey, as well as other states similarly situated, are losing an enormous amount of revenue but have an enormous amount of expenditures. And so certainly the experiences of New Jersey have helped inform me. My colleague, Senator Cassidy of Louisiana, is probably the 3rd largest state in terms of facing the consequences of COVID-19 right now. And so the information has really informed me, as well as conference calls that I've held with several of the state's mayors and county executives and others. So we're in the midst of a very tough challenge. We've today, as of yesterday at least, we had over 82,000 cases of COVID-19. We've lost 4,000, over 4,000 of our fellow citizens, and we're to reach the apex of the COVID-19 challenge that we're in the midst of. So it's a tough time. So I think that our proposal...
Senator, just hold on. We're having some difficulty hearing you, so we're now going to go to break, and we're going to come back and have more with Senator Bob Menendez after that. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Earlier today, President Trump's chief economic advisor, Larry Kudlow, spoke with Bloomberg Television and talked about the proposed new spending bill that's supposed to come out this week, as well as how the existing spending package has been working. Here's what he said.
I don't think the rules were bad to begin with. I mean, there might have been some glitches here and there. I think Secretary Mnuchin has done a terrific job over at Treasury, working with SBA. I guess nothing's perfect in life, but on the whole, judging by how fast that original $350 billion went out the window, I think it's a very, very good program. Now, mind you, we're stepping up into the medium-sized area, but that's being done principally through the Federal Reserve's lending facilities, the so-called Main Street lending facilities. And, of course, there will be some assistance to large, important companies that have hardships. Obviously, the airlines are one of them. So, look, I think it's a pretty solid program. There are always tweaks here and there, but the fact that it works so quickly, I think, is testimony to its efficiency.
Larry, I agree on one of those points. It's acted much quicker than I thought it would. I thought there would be troubles getting the money out the door. Doesn't seem that was the case at all. I accept that. I was certainly wrong about that. But if a $1 billion company can get access to the Paycheck Protection Program that was designed for small companies, we've got a bit of a problem. I think we can both concede that. So we need to make some tweaks. Is that part of the agreement, that we'll just tweak things up a little bit so the likes of Shake Shack, a $1 billion company listed here in the United States, doesn't get access to those funds for small businesses?
Well, look, Jonathan, I'm not. I haven't really followed the Shake Shack story. Apparently, there are some issues there. They may be able to seek financing through the Federal Reserve loan facilities. I don't want to go there. There will always be tweaks. We're trying to do this as expeditiously as we can. And look, the whole point is, and we've talked about this, and I'll just repeat it, we just want to stabilize, put enough cash, enough liquidity into the economy to get us through the next couple weeks. All right? That's the whole purpose of this. Small businesses and those who work for small businesses. As you know, the unemployment numbers are very bad, although there's some evidence that perhaps they might be slightly less bad. But it's a very bad hardship situation. No question about that. If we can get through the next couple of weeks, and as you know, the administration's health scientists have given the governors a very good guidance and roadmap for reopening in several stages, then May may be a transition month into a much better economy, moving out into the summer, where hopefully the contraction will give way to some economic growth. We're just trying to set the stage for that and keep folks going, with the direct Treasury checks, with the deferral of the payroll tax, with the deferral of student loans and income taxes, and on and on. That's what we're trying to do. I think in a short period of time, I got to give credit, I think the operating agencies have done a good job.
Let's move on to tariffs and trade, shall we? A latest announcement, in fact, overnight, we'll be deferring some payments of tariffs on some goods. Can you give us some clarity there, Larry, what the purpose of that latest move is overnight? You and I have talked about this back and forth several months now. Some action overnight. What have you done? Why are you doing it?
On the so-called MFN, most favored nations, where there are hardship cases, Jonathan, we will suspend tariffs for a few months, I think 3 months. We are not rolling back 301s, i.e. China tariffs. We're not rolling back 232s or other trade deals. But in some cases, the customs duties, right, the excise tax you pay on the imports, the customs duties will be lifted if there are hardship cases. In particular, there is a lot of concern about retailers and related supply chains getting into the United States. It's a significant action. We want to help folks. It's a way of helping out certain industries. It's not an enormous action, and it doesn't change the president's own trade policies. But yes, we're suspending and deferring, as we have with things like income taxes and payroll taxes and elsewhere in our recovery plan.
That was Larry Kudlow, the chief economic advisor to President Trump, earlier today talking to Bloomberg Television. And now I'm delighted to say we have back with us Senator Bob Menendez of New Jersey. I'm sorry, Senator, for that technical difficulty that we had, and thank you for your patience. We were talking about your proposal of $500 billion aid to the state and local governments that you're making on a bipartisan basis with Senator Cassidy from Louisiana. Can you give us any sense of the prospects for passage of that proposal? And specifically, is the White House supporting it?
Well, David, this proposal follows the call by the Bipartisan National Governors Association, all 50 states, Democrat and Republican governors alike, who called for this amount of money. Senator Cassidy, a Republican from Louisiana, has joined with me with developing the formula that we have. So we have a bipartisan proposal to start off with. I know the U.S. Conference of Mayors, the National League of Cities, are also advocating for resources. So we think there will be widespread support. I can't speak to the administration's views yet, but at the end of the day, we think that helping the states is critical to reviving the national economy and meeting the challenges, and we think there'll be broad bipartisan support by the time we do a COVID-4.
Senator Menendez, let's come back to your home state of New Jersey, because there is such a problem now with the coronavirus there. Could you give us a sense of how that stands? And let me ask you very specifically about the nursing homes or the extended care facilities, because there are increasing reports about real difficulties at some of those facilities. Do you know more about that?
Well, I know the governor has demanded, in real-time reporting on all of our nursing homes. And obviously, we have a vulnerable population, particularly to COVID-19, those who already have immunodeficiencies and other challenges. So I know that he has called upon all of the operators to give in-time reporting. I think that the Department of Health has sent out its inspectors, and I also know that as it relates to our veterans' homes, he has engaged the military as well and the Veterans Administration to be responsive there. So this is an alarming challenge to an overall incredible difficult set of circumstances where we've lost overall in our state over 4,200 lives.
Senator Menendez, last week there was a lot of talk about getting the country back to work again, getting the economy going again. And again, your governor, Phil Murphy, has been very adamant, saying, let's not go too far too fast. We don't want to go backwards. We want to continue to flatten the curve, as they say. Do you have views about exactly what we should be doing as a country to get the economy going again? Because we don't want to have to go back to lockdown. On the other hand, the longer the economy is flat on its back, the more difficult it is for everyone.
Well, I personally believe that the nation's wealth will only get better with the nation's health, which means we have to deal with breaking the back of the spread of the virus. And the only way to do that is through the difficult social distancing measures that take both a personal, emotional, and economic toll. But I cannot believe that we will get the economy back to where we want it if there isn't consumer confidence that when I go out, to a function, a restaurant, a retail store, or anything else, that I at least have seriously mitigated the risk that I'll get infected. Until there is a sense that that can happen, I don't think you fully get the economy back on board. So that's why I and others on a call with the Vice President made a very strong case for testing.
That's Senator Bob Menendez of New Jersey. Thank you so much for your patience today, Senator. Really great to have you with us. Live from New York, this is Balance of Power on Bloomberg Television and on radio.